CPE Center for Professional Education.
Students, this is Suresh Kumar working as accounts faculty in CPE Junior College. Today, we are going to discuss the introduction of bookkeeping and accounting. Yeah, shall we start then? We have three statements. Accounting is an art. Accounting is a social science. Accounting is a business language. First, we'll see the first one. Accounting is an art. The decisions and estimation making can be classified accounting as an art. So many others will say accounting is a science as well as an art. But most of the features of accounting is artistic in nature. Let me explain why. The decision means the assumptions, perceptions are differ from person to person, entity to entity. So it is basically an artistic feature. So we can say accounting is an art. The second one, accounting is a social science. The usefulness of accounting to society as a whole is the fundamental criterion to treat it as a social science. Let me explain. As accounting is dealing with business and all, business is part of society. Business is part of society. We all human beings are part of society only. So when we start writing our business transactions related to the business like customers, suppliers, banker, investor, whomever, they are all part of our society only. So as a whole, accounting, we can say it is a social science, right? So the third one, accounting is a business language. The aim of accounting is to meet the information needs of the rational and sound decision makers, and thus called language of business. Simply we can say to know the business, to understand the business, to reveal the business performance like either profit or loss, and even the position of your business, whether you're solvent or insolvent and all. We should have a language. That language is our accounting. So we call accounting is as a business language, isn't it? First we'll see what is business. Before discuss the term business, first we'll discuss about trade. Before discussing the word business, first we'll discuss what is trade. Simply, trade is buying plus selling. In books you will get the definition or meaning like exchange of a good or a service at a predetermined cost or a price. Exchange of a good or a service at a predetermined cost or a price is known as trade. Means simply exchanging. A good will be sold. Vendor will sell the good to the buyer, means exchanging of goods. Similarly, services from one person to other person is nothing but trade. Coming to commerce, trade plus aids to trade. Trade plus aids to trade is known as commerce. Means some facilities facilitate the trade known as commerce. Some facilities facilitate the trade known as commerce. Now we'll see the list of different aids to trade. Okay, the first one is banking. As we know, no money, no business. So to start the business, we need finance. To expand the business or to develop the business, to open different branches, we need finance. So banking facilitates the financial needs. Means banking fulfills our financial needs. The next one is transportation. Without transportation, we cannot expect the place utility of a good, because sometimes the producers may vary far to the consumers. How we are enjoying different goods, because all goods are not available or not manufactured in nearby our places. So here transportation creates place utility so that ultimate consumer can enjoy different sort of goods which are manufactured in different places and all. Means transportation is a bridge between customer and the supplier or manufacturer. Okay, and the third one is insurance. As we know, business is just like a coin. When we toss a coin, we may get either head or a tail. Similarly, in business, we'll enjoy handsome of profits, sometimes losses even. Why losses? Due to risk and uncertainty, will face loss. Means business is having both sides, profit as well as loss. So to minimize your risk, safeguard your uncertainty, will go with insurance. Insurance makes secure, it provides security, right? The other one is warehousing, godowns simply will say. Warehousing creates time utility. Time utility means it extends the lifespan of perishable goods and etc etc. Because every time it is not possible that whenever we produce on the same day or very soon we are going to consume them. Okay, in that case we should preserve them for more time, like weeks. We are just extending the lifespan by using warehouses, isn't it? Now the last but not the least, advertising. Nowadays we can say advertising is the king of market. It differs successful and unsuccessful entities in a clear cut manner. Because first we have to tell about your goods to the ultimate consumers. Once the consumer know about the good, then only they'll approach. So advertising is very important nowadays. Okay, students. So now we'll see the word business. Already we discussed what is trade, what is commerce. Now what is business? Commerce plus profit motive. Simply we can say, just like a simple equation, commerce plus profit motive is business. Means an organization or an entity engaged in commercial, industrial or professional activities known as business. Simply we can say being state of busy is nothing but business. So till now we discussed what is business and all. So now why accounting? What is the need of accounting? Every individual, each and every individual or business unit is engaged in some business activities to fulfill their set of needs and wants. So everybody wants to keep record of all transactions and events and to have adequate information about the economic activity. Information about the economic activity as an aid to decision making. To take decisions, we should have some information. No, the thing we are going to record, the information we are going to generate through accounting. So every business unit wants to know their profitability and assets purchased and financial obligations made in the particular period. Means how many assets we acquired, means we bought during the year, how much we are having obligations, financial obligations like liabilities we are going to pay and all. And accounting supplies required information. It supplies required information to the different users like stakeholders, government, banker, etc. Because they are in need of the particular information to take rational and timely decisions. So now, classification of business activities. Classification of business activities. So many activities daily we are involving and encountering and engaged in different sort of activities, students. So these activities mainly classified or divided into two parts, two types: economic activities and non-economic activities. Economic activities and non-economic activities. Let me explain with a simple example what is economic activity and what is non-economic. Okay, see, if a lady cooks food and serves to her family members, a lady is cooking food and serving her family members, you tell me, is she expect any income? Obviously no, right? So these are non-economic, these are non-economic, because she is not at all expecting any revenue on her whatever the job she is performing. Not job, we can say whatever the thing, activity she is going to perform, that is full of love and responsibility, affection towards her family, known as non-economic. But if the same lady cooking food and selling, like if she's maintaining a hotel, that time she will expect, then she will expect some income, revenue, so that it becomes economic activity. See, this is a thin line between economic activities and non-economic activities. Hope everyone understand, right? So again, here in accounting, here means in accounting we are just considering economic activities only. We are not going to recognize, we are not going to deal with non-economic activities, because accounting deals only with economic activities. So students, these economic activities are further classified into two: transactions and events. Transactions and events. So now we'll see what are transactions and what are events. Are you ready? Now, so first we'll see financial transaction. A transaction means a course of action. Let me repeat, a transaction means a course of action. It is an external affair which deals with supplier, customer, etc. Simple. It is an action of buying, selling, payment, receiving something. Means there is an involvement of some other person. Like if you are selling, to whom will sell? To customer will sell. If you are buying some goods, from whom will buy? Supplier. Means it is an external affair. External means some other person will involve in the particular activity. That kind of economic activity known as a transaction, purely financial transaction. Is it clear? So now we'll see what is an event. An event, it is an outcome or result of transactions. Let me repeat, it is an outcome or result of transactions. Say if we bought something and we sold something, okay, if we bought something for 10,000, we sold the same for 12,000. Is it clear? So buying, a transaction, selling, also a transaction. But when we gather both the information, when we match both the thing, what is, at what cost we bought, at what rate we are selling, means how much we realized on the sale of the particular goods, you can see the result, either profit or loss or some balance. That outcome or that result of transaction known as an event. Isn't it? Good. Now, it is an internal affair. As we discussed earlier, transaction is external, means somebody else is joining with us in the particular activity. But here it is a pure internal affair which deals with owners, management, etc. Means internally we'll calculate our profit, what are the balances of assets and losses, unsold stock, well known as closing stock and all. All these comes under events. But one important note, all events are transactions, but all transactions are not events. All events are transactions, but all transactions are not events. We'll discuss in the examples. Next example. We have some examples here. Okay, by using examples, you'll understand in a better manner. First, see this example 1. Goods purchased for 10,000 rupees. Goods purchased for 10,000 rupees and the same goods sold for 12,000. Already I just explained just now. Goods purchased for 10,000 and the same goods whatever we bought, the same goods sold for 12,000. So here buying and selling of goods are transactions. Both are external. Buying from our supplier or manufacturer, we sold to our customer, external affairs known as transactions. Okay, now we can see there is a profit of 2000. In this particular example, we can see 2000 rupees profit is there. How? 12,000 rupees we realized from our customers and the cost incurred is 10,000 only. So the profit derived from the above two transactions is an event. It is a result or outcome of transactions. It is a result or outcome of transactions. As we know, it is a pure internal one. Is it clear? Is it clear? Good. Now we'll see the next example. See in this example too, goods purchased for 10,000 and 80% of goods are sold for 9,000. What is the difference between the previous example and the particular example? In the previous one, the entire goods has been sold out. But here, we sold 80% of goods only. So here, buying, selling of goods or transactions. Already we discussed. Economical activities which involves other person like external activities known as transactions. But there is a profit of 1000 rupees. It is an event. How we will calculate the profit here? See, sales minus cost of goods sold is equal to profit. We should not consider the total cost, dear students, because we are not selling the entire part of goods. We are just sold out 80%. So we should consider the cost portion of goods sold only, known as cost of goods sold. Hope everyone understand. Good. So here sale revenue is 9,000. So total cost 10,000, no? So 10,000 into 80% only we should consider as cost of goods sold. So 9,000 minus 8,000, 1,000 rupees is our profit. So this profit is an event. And here we have another event, that is unsold portion of goods. Unsold goods or unsold units or closing stock. Out of 10,000 cost of goods, we just sold 80%, isn't it? So now, what about the rest 20%? This particular 20% unsold is known as closing stock. That is 10,000 into 20%, 2,000 rupees is also an event as closing stock. Is it clear? Okay. Now we'll see one more example. Furniture purchased for 25,000 on 31st March 2018. 31st March 2018 means year ending. This is a transaction as well as an event. Purchasing of an asset is a transaction as we discussed earlier, and the balance of asset at the end, because we bought the furniture at the end of the year, no? So the balance of asset at the end of the year is an event. The balance will be carried forward. It will be carried forward to the next year as a balance. It is an event. So hope everyone understand what is a transaction and what is events. So now this is the time to discuss the definition of bookkeeping. So till now we discussed what is trade, business, activities and all. Now we'll see what is bookkeeping. Bookkeeping is the science and art of correctly recording in the books of accounts all those business transactions that result in the transfer of money or money's worth. The result in the transfer of money or money's worth. See here, this is a science. Means why it is a science? We are just following some rules, what to be debited, what to be credited and all. Okay, and correctly recording, we are just keeping a proper record of transactions in our accounts. So all these business transactions result in the transfer of money or money's worth. Money or money's worth means those activities or transactions which can be expressed in terms of money only will recognize here. So see how beautifully defined by R.M. Carter. This is a very popularized definition for bookkeeping. So here, bookkeeping is the branch of knowledge that reveals how to keep a record of business transactions, and it is known as often routine and clerical in nature. Often routine, it is a routine thing that the bookkeeper will write the transaction in the proper books and all. They'll maintain it. Okay, now we'll see the definition of accounting. Students, we have so many definitions given by different authors, but we have two standard definitions of accounting known as traditional definition and modern definition. So first we'll discuss about traditional definition, right? Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the result thereof. This is the definition given by American Institute of Certified Public Accountants in the year 1961. According to this definition, they defined accounting as an art, like first we'll record the transaction, then we'll classify, means separate into different accounts, then summarizing means what? Preparing trial balance and ascertaining profitability and position through preparation of financial statements and all, right? So at last, whatever information generated will be communicated to the accounting users. Now we'll see the modern definition. This is the definition widely accepted definition of accounting given by the American Accounting Association in the year 1966, which treated the accounting as the process of identifying, measuring, and communicating the economic information to permit informed judgments and decision by the users of accounting information. This is the one given by American Accounting Association, well known as modern definition. See here, in the previous definition, they defined accounting as the art, as an art, right? But in this definition, they defined it is like a process of identifying, measuring, communicating, means in three stages they defined. They use these three words: identifying of what? Identifying whether it is a financial transaction or event. Then you will start measuring in terms of money or money's worth. Then whatever the information generated will be communicated, will be supplied to the accounting users, either internal or external. Isn't it? Yeah. Now this is the time to discuss the distinction between bookkeeping and accounting. Bookkeeping and accounting means, as we discussed earlier, bookkeeping is a part of accounting, dear students. It is a part of bookkeeping. Where bookkeeping ends, the real accounting starts. Where bookkeeping ends, accounting starts. So first, we'll see what are the distinction, what are the differences between this bookkeeping and accounting. First, on the basis of scope, it is a process concerned with recording of transactions only. When you see bookkeeping, it is a process of concerned with recording, how to record, how to keep record of transactions. But when coming to accounting, it is a process concerned with summarizing, analyzing, interpreting the results even. Not only recording, after record, after recording of transactions, we'll do summarizing, means preparation of final accounts. Then you'll do analysis. Then you'll supply the generated information to the users. Right? When coming to the objective, the main objective of bookkeeping is to maintain systematic record. That's it. Systematic recording of books, means business transactions and all. But coming to accounting, to ascertain profitability, financial position of the business is a part of accounting. This is the main objective of accounting. The third, nature. Already we discussed, bookkeeping is often routine and clerical in nature. But accounting is analytical. It is a dynamic one. Means executive in nature, we can say. Bookkeeping is routine in nature, clerical in nature. But accounting is analytical and executive in nature. The next one, responsibility. A bookkeeper is just responsible for recording of transactions only. He will record, proper record he will maintain, that's it. But when coming to accountants, they are responsible for finalization of accounts and revealing the results of the particular business enterprise and all. Okay, and now subfield. There is no subfield for bookkeeping because it is a part of accounting, no? So there is no subfield for bookkeeping. But accounting has different subfields or branches like financial accounting, cost accounting, management accounting, etc. And the last one, staff involved. The bookkeeping will be done by the junior level staff. Means junior staff will perform bookkeeping task. Coming to accounting, senior staff, senior accountants will perform accounting work and all. Hope everyone enjoyed this class. Okay students, this is all for today and we'll meet in the next video.